What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had a flat day without any major developments, but overall we are still in a bear market and the bulls still have everything to prove. First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we are basically flat and we're still closing above that critical support at 380, and that will be the major support the bulls need to hold. Otherwise, SPY is coming back down to 370 to close the gap right around 369. And likely if it gets down there and that support level fails, we will see that next leg lower down to 350. So as I always say, let price action do the talking. So the next major breakdown will be SPY closing below 380 for those next legs lower. And right now with the volatile market, you're looking for about a 10-point move every time a support level fails. Now keep in mind, you can never completely write off the possibility while we're getting a pullback that it's going to be a lower high. So if we do see a bounce from a lower high, it's still likely that we could close that gap up there right around 401. So keep in mind, we have a gap to the upside at 401 and we have a gap to the downside right around 369. And there is no telling which one of these gaps is going to fill first. Use price action as your indication. So as a bull, if you see price action bouncing off 380, you're going to use 380 as your risk level. And as a bear, your risk level is still up here right around 390. So the risk reward still favors long traders, and that's likely why we didn't see any major breakdown through support today. But there's always the possibility that support level fails tomorrow, so you will want to watch price action at that level. So just a quick reminder, critical support right now is 380, 370, and below 370 we're likely going to that next leg lower at 350. Critical resistance is at 390. Our resistance trend line at 395 and the gap fill right around 401, and there will be a lot of bears waiting at that gap. That is why we have the picture of the bear waiting at that resistance trend line. So while we're in a bear market and we have a downtrend, do expect bears to show up at all of this major resistance, and this is going to remain a very heavy market with the price action until we get that higher low breaking out to a higher high to let us know the bulls are back in force. The bears have all of the advantage while we have the downtrend, and we still do have the downtrend. Also pay attention to volume because we are getting very low volume and it will take higher volume selling to start breaking down unless we get back into a buyer strike, which right now we are seeing buyers at support, so we don't have that problem at this moment in time. On the NASDAQ 100 triple Qs, we were also flat on the day, only going up 0.09%, and the triple Qs is still closing below about 287, so that is still going to be a resistance levels that bears will use as a risk reward setup for short trades, more than likely waiting until that gap fills down there at 277. So the critical resistance in the triple Qs is right around 287, 291, and our resistance trend line is right around 293. And if the bulls can break all of that resistance, it is very likely they'll have no trouble filling the gap at 299, but there will be a lot of bears waiting right around 300 to 306. So while we do have the bear trend, expect there to be bears at every single one of these resistance levels above. Now, while the bears have the advantage of the trend, they will try to go close this gap down here at 277. And if they continue to drive prices below that gap fill, the next critical support will be down here right around 269. Below 269, you're looking for that next leg lower with the valid price target at 258 as long as we're in the downtrend. And the triple Qs are still in a downtrend and still in a bear market. So right now the bears still have full control of the triple Qs unless the bulls can start getting that breakout above about 287. So that's going to be the critical pivot to pay attention to. In the Dow Jones, we were also flat, only going up about 0.25%, and the Dow Jones is still getting rejected at that resistance right around 311, with the second day in a row closing below that level. The Dow Jones has two gaps to fill to the downside, with the first being at 307 and then the next gap fill being down here right around 300, and below that we're retesting the low at 297, and below 297 the next low will be all the way down there at 276. We still have the bear trend, so the bulls need to break above 311 and then get back over the 20 simple moving average at 315, and then they could make an attempt to close the gap up here right around 323, but there will be a lot of bears around that resistance zone between 320 and 323 as long as the bears have the advantage of the trend. So remember, trading is all about risk reward, and right now with the strong downtrend, there are a lot of bears and a lot of people shorting this market because it is such an easy risk reward setup, and we do have the advantage of the downtrend. Now just keep in mind, if too many people get bearish, the market will do a counter trend rally, which would likely be the gap closes to the upside. So don't completely rule out the bull scenario if you see the Dow Jones starting to break out back above 311 and then back above 315. On the Russell 2000 IWM ETF, we were down 1%, and the Russell 2000 did hold that support zone at 170, and that will be the next major breakdown if we do see price action closing below 170. You're looking for a retest of the low at 164, and below 164, you're looking for the brand new leg lower at 156. The bulls need to hold support at 170 and get a bullish breakout back over 175 and 176, which is that 20 sample moving average. Come back up and break out above the 50 EMA at 181. Fully close the gap right around 184 and then get that bullish breakout above the resistance trend line. You can see the bulls have a lot of work to do because there's still a very strong downtrend and they're going against the trend with a lot of resistance to the upside that the bears will utilize as risk reward setups for short trades. So while the Russell 2000 did close the gaps to the downside and there's still a gap to the upside, we don't know that that gap has to get filled before we make that next leg lower at 156. So only start getting more bullish on that gap fill if we can get back over the 20 simple moving average and this resistance right around 175. On the ARKK ETF, we were down about 1.57% today, closing back below all of the moving averages and regaining that bearish trend, which is no surprise because this ETF has been in a bear market for a very long time and has still failed to close above resistance. So in the ARK ETF, we need to see consecutive closes back over 47 to get more bullish. Otherwise, we're expecting more downside, which likely means we're coming down here to fully close this gap right around 39 and possibly retest the low at 36.5. And below that, you're looking for the next leg lower with the price target at 33.7. Upside resistance zones will be right around 42 and that 50 EMA at 46 with the strong resistance at 47. On the VIX, we were down 0.71% with the VIX closing back over the 20 simple moving average for the second day in a row. So the VIX is starting to look like it's trying to form a higher low, which means we could see the VIX spiking back above 30 for the next bear market leg lower. Otherwise, the bulls are waiting to see the VIX come all the way back down and close below 24. So above 24, it's still a very volatile bear market, and definitely above 30, you're looking for the bear market to make that next leg lower. Otherwise, the bulls are going to crush the VIX back down below 24, and that will be your bullish indicator. On Bitcoin, we're currently down 0.71%, and Bitcoin is still holding that support zone right around $20,000, and we do still have the bear trend. So as you can see, Bitcoin's Bollinger Bands are starting to squeeze, so this consolidation at this support is developing a large move that's coming soon, and that large move is either going to be on a down move on a break below 19,000 with the price target down there at 12,000, or a bullish move on a breakout back above about 23,000 for a retest of resistance at 28,000. So you can get a lot more bullish on a break above 23,000 and you're getting a lot more bearish on a breakdown below 19,000. Everything else is more than likely just accumulation or consolidation until we see that big move, and let the price action tell you which direction that move will be. On NVIDIA stock, we gapped down and closed down 2.75% lower and did close below that support level right around 156, but only by just about 60 cents. We did open another gap above that doesn't fill until we get back over 159, but as you can tell, there are a lot of gaps to the upside that have not yet filled, so you can't assume we have to go fill those gaps now. We have that valid price target down here at 150 and we're getting very close to that price target. But if we fail to hold that price target as support, we're coming all the way back down to 125. So while this may be the bottom at 150, you'll need to see price action confirmation of a bounce off that level. Otherwise, you will be looking for a significant drop lower. We still have the bear trend, so we have to continue to look at lower prices until the bulls get their bull breakout. And the bulls need to get all the way back above 183 before this is starting to look like a bullish breakout. Resistance on the way higher will be at 161, 171, 177 and right around 181. So there will be a lot of resistance for the bulls to break out going against the strong downtrend. So there's really nothing bullish in NVIDIA stock just yet, unless you're liking the valuations at these low prices and you're accumulating just because it's getting cheap. On Tesla stock, we were down 1.79%, and Tesla has a gap just above right around $700 and just below at 663. So it's anybody's guess which gap is going to fill first, but we do have the advantage of a downtrend, so the bears still do have full advantage. Bears are going to use $700 to short at for those lower price targets at 663, that previous low at 638, and then the other low on the daily chart at 620. On a break below 620, the next leg lower will be at 571. And if the bulls get the bull breakout back over 700, you're looking for strong resistance at 745, 775, and then above that, that will look like the bullish breakout but it's going to take a lot of work for the bulls to get a close above 775. On Apple stock, we were up 1.3%, so Apple did hold that support level at 137. However, the price action failed to close back over that resistance at 140, which is the 20 simple moving average. Bulls will need to hold support at 137 and start breaking back above about 142, and then come all the way back up to about 146 at the 50 EMA and break above that level, and then Apple will be looking a lot more bullish. However, Apple still does have a downtrend, so getting rejected from the 20 simple moving average at 140 could send it down to close the gap at 133. And below 133, you're looking for a retest of the low at 130. And below 130, you're looking for the next leg lower down here at 120. So right now, bears still have full advantage with price action still below resistance and Apple still in a downtrend. So remain cautious because downside is more likely until Apple starts closing above 142. On the financial sector, we were down just over 0.5%, and the financial sector is back below all the moving averages and still in the bear trend. So at this point, we could be coming back down to retest the low or make a brand new 52-week low. The industrial sector was down 0.58% with price action below all the moving averages and still in the bear trend. So look for a retest of the low. Otherwise, you're waiting until the bulls can get back over the 20 simple moving average and the 50 EMA. On the healthcare sector, we were up 0.87%, and the healthcare sector is coming back up to the 50 EMA, but so far that level is still acting as resistance, and we still do have our resistance trend line. It's more than likely that we do need a little bit lower to retest some support before we can get the next leg higher, but if you start seeing the healthcare sector breaking back over the 50 EMA, that will be a bullish breakout. The energy sector was down 3.5% today, closing that gap below and closing back below all the moving averages. So we continue to see weak price action that is strengthening the bear trend. We do have gaps to fill to the upside, and we do have critical support down here at 70. So look for more downside if support fails. Otherwise, we could see a bounce and a continuation to the upside to close some of these upper gaps. So jumping back over to the S&P 500, this is a very critical support level for SPY at 380, so watch that level closely because the bulls will likely try to use that level to come up here and battle some of this resistance. Keep in mind this is a bear market and a strong downtrend, so the bulls have everything to prove and the bears have the advantage of the trend. While we're in the bear market and while we're in the downtrend, get comfortable seeing lower highs and lower lows because that is going to be the norm until the bulls prove it with the price action and break the downtrend. And right now, the bulls haven't proved anything. So have realistic expectations and remember this is a very volatile market. So have discipline, have patience, and use great risk management. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. If you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.